Bitcoin has now entered what has historically been its strongest period of price action. But will BTC really have the positive end to 2025 everyone is expecting? Well, this new Bitcoin chart is telling us exactly what we can expect to happen next. So we'll get straight into it here on the Bitcoin seasonality chart we have here on BitcoinMagazinePro.com. Now, as we can see, we've finally concluded September, which was an up and down month to say the least. Historically, our worst performing month for Bitcoin when looking at the seasonality chart. And we can see October, especially November and December, Q4 is historically been by far our strongest period of price action for Bitcoin. Now, given where we kind of anticipate us to be in the cycle, if we are still tracking even loosely that 4-year cycle that Bitcoin has historically followed, then we can potentially anticipate a more exponential phase of price action and potential top in the bull market peak before 2026. Now, is this likely to happen? Well, there's a few metrics, and especially one new metric that I've been working on that I think can really outline especially what we can expect to happen next for Bitcoin. Now, we can see recently, if we just look at the Bitcoin price action, we bounced from the short-term holder realized price. Now, this is the average accumulation price or cost basis for new market participants. And we can see as Bitcoin dipped to about $108,000, $109,000, around there, it actually coincided with this cost basis average accumulation price for new market participants. Now, these new market participants are pretty important for Bitcoin. Bitcoin struggles to rally high when people aren't buying Bitcoin. It's supply and demand economics. And we can see throughout Bitcoin's entire history, this line has pretty much acted like a moving level of support during bull markets and resistance during bear markets. Now, who is selling the Bitcoin to these short-term holders? Well, pretty obvious, it is the long-term holders. So if we take into account those that have been holding Bitcoin for 155 days or more, now a lot of people look at this and say that's not a long time to be holding Bitcoin. I've been holding Bitcoin for 5, 10, however many years, and you know, if you've only been in Bitcoin for 5 or so months, you're definitely not a long-term holder. But there's plenty of data to back up that beyond that threshold, you're considerably more likely to hold on to that Bitcoin indefinitely than be trading it or moving it, transferring it again in a shorter term basis. So beyond 155 days, we're considering them to be long-term holders. Now, what we can see as Bitcoin is rallying massively to the upside, this is when Bitcoin is transferring from these experienced, potentially larger holders to these newer market participants. Again, supply and demand economics. Bitcoin's price wouldn't be going higher if there weren't people willing to sell at higher prices. So we can see, especially over the past couple cycles, as Bitcoin has really rallied into the exponential phase of the cycle, we really see a huge amount of Bitcoin transferring hands, new capital flowing into the market. But one thing we need to acknowledge is, especially in this cycle, which has been a little bit peculiar when looking at this metric, we've had multiple different peaks in this data point. We've had a huge amount of Bitcoin transferring hands from long-term holders to short-term holders, especially as Bitcoin was running up, from around $40,000 in this region up to above $70,000+ as we set that first new all-time high. And again, around here, as Bitcoin was about 50K, we saw a huge amount of Bitcoin transferring hands as we first ran up to above $100,000. So clearly we're seeing long-term holders begin taking profit as the Bitcoin price gets potentially overheated. I don't want to say too high, because usually it's not like we see the first sign of long-term holder profit taking as Bitcoin is peaking. Usually there's tens, hundreds of thousands, if not millions of Bitcoin that is exchanging hands before we typically see a market peak. However, what we can see is usually as Bitcoin's price action is topping out, it is coinciding with the fastest rate of acceleration of long-term holders taking profit, of short-term holders accumulating this potentially overpriced Bitcoin. So is there any way we can use this data a little bit more? Because obviously looking at the short-term holder supply is great, but we don't know exactly how low it's going to go. We don't know exactly how long it's going to last. And it's difficult to really take into account the rate of acceleration or deceleration without really manipulating the data. So if you are a site subscriber, which obviously I'd recommend you to be, you can actually download and manipulate this data yourself, or via API, you can actually connect and use the raw data from a vast number of our metrics on BitcoinMagazinePro.com. And there's tutorials and everything on this page, so I definitely recommend checking it out. But what we can do is, if I just go to this page here, this is just a Google sheet where I've actually manipulated a lot of this long-term holder supply data. Now, what this first chart is showing us is the long-term holder supply of Bitcoin, but when taking into account the circulating percentage of BTC. Now, this is pretty interesting because one way you can calculate the money multiplier effect of Bitcoin, or the amount of dollars coming into the market to actually increase the market cap. So very quickly, if we had a money multiplier of 1, then $1 injected into the Bitcoin markets, $1 dollar of capital rotated to accumulate BTC would increase the market cap by $1. But historically, that hasn't really been the case. We've not really seen that perfect one-to-one direct influence from new capital coming into the market. We actually see the market cap increase more than $1 when $1 comes into the market. This is the money multiplier effect. So very quickly, if I just go back to the long-term holder supply chart here, if we were to see, well, if we were to calculate this as a percentage, so say up here when we had around 16.3 million Bitcoin held by these long-term holders, given the circulating supply of over 19, near 20 million, that's around 80% of Bitcoin being held by long-term holders. Now, these holders aren't very willing to immediately give up their Bitcoin. So at this point, we had a very high money multiplier effect because the amount of Bitcoin available for accumulation on the network was considerably lower than it usually is. So we saw a money multiplier effect just purely based off this at around 5, nearly 6x. So $1 coming into the market would increase the market cap by a value of about 5 or 6x. Now, one thing we can do is if we look at this money multiplier effect, we can see that there is definitely some points where we can potentially anticipate Bitcoin's transferable Bitcoin from long-term holders to short-term holders to potentially bottom out. We can see we've already bounced 3 times from this trend line. So if Bitcoin can move down to around this region here, then I'd maybe anticipate Bitcoin's price to be close towards a market peak. And another good way to look at this is, again, even if we were to look at somewhere around here, we can see Bitcoin on numerous occasions, this money multiplier effect has bounced from this level. So if we actually take into account that level there, as well as this trend line that we're setting here, then I think if Bitcoin's money multiplier based on this long-term holder supply gets anywhere into this region, then I'd definitely consider taking considerable profits on my Bitcoin positions. But we can take this a step further. So what I can do is just scroll down because, like I said, we're seeing a peculiar amount of data. We're seeing peculiar behavior and habits from these long-term holders this cycle. We're seeing a huge amount of Bitcoin distributed, then a huge amount actually returning to long-term holders. Now, this has been mainly influenced by institutional investors, treasury companies buying up Bitcoin and holding to potentially who knows when, indefinitely. So these are becoming long-term holders. Then we're seeing more long-term holders take profit as Bitcoin runs up again. So what I wanted to do is actually isolate and look at the cumulative amount of Bitcoin that are transferred from long-term holders to new market participants. So if I just go back here, what I can see on this chart here, which is just over the past couple cycles, we can see the cumulative amount of Bitcoin that's transferred from long-term holders. Now what we can see is I'll just remove the Bitcoin price section, but I just very quickly go to here just to make the chart a little bit clearer. We can see that this cycle we've already surpassed the cumulative amount of Bitcoin sold by by long-term holders to new market participants. What this is doing as well is also resetting. So when this drops back down to 0, that's after a market peak has occurred. So in hindsight, we can obviously see that so far. We're assuming there's not been a Bitcoin top, so this continues to move to the upside. And we can also see as Bitcoin bottoms out, this again moves to 0. We can see far less Bitcoin being moved from long-term holders to short-term holders, new market participants during Bitcoin bear markets. But one thing we need to acknowledge is Bitcoin is obviously changing as an asset. There's more and more Bitcoin being mined every single day. So rather than just looking at the raw amount of Bitcoin being transferred, we should take into account the circulating supply of Bitcoin at that moment in time. So this is the same chart, the same metric, but it's also taking into account the circulating supply of Bitcoin at that moment in time to almost give us a percentage of long-term holder Bitcoin being moved. Now again, if I move the Bitcoin price action so it gets a little bit clearer, again, if you just take into account this is going back to 0 at market cycle peaks and market cycle bottoms, what we can see is we're at a pretty interesting point at this data. We can see throughout 2017, the percentage of the circulating supply being transferred from long-term holders to new market participants was 37.8% roughly of the entire Bitcoin circulating supply. In 2021, it was the exact same percentage, 37.8%. Keep in mind these are percentages, so you know, multiply them by 100. And as Bitcoin's market bottomed out during the Bitcoin bear market, we could see 9.6% and here 10.4%, very close to around 10%. So it's amazing that we're seeing such consistency in investor behavior and the habits of long-term holders actually transferring Bitcoin, taking profit towards Bitcoin cycle peaks and cycle bottoms as well. But one thing you'll notice is during this cycle, we've already surpassed this threshold. We're actually currently at 37.9%, higher than the previous 2 cycle peaks, or right around that point. So is this something that should be concerning? Should we now anticipate that Bitcoin's price has topped out and that we're not going to see significantly higher prices before 2026. Well, there's something else we need to take into consideration. Rather than just accounting for the circulating supply of Bitcoin, we need to acknowledge that Bitcoin's, I don't want to say use case, has shifted and changed and evolved, but essentially its use case. In previous cycles, a lot of Bitcoin was being used for peer-to-peer electronic cash conversions, transfers. People were spending and using Bitcoin. Whereas this cycle, there's definitely been more of a narrative shift to Bitcoin being a forever hold asset, a store of value more so than a medium of exchange. Now, we can argue whether that's a good thing or a bad thing, but ultimately we need to acknowledge that the amount of Bitcoin being held by long-term holders has increased. The percentage of the circulating supply being held by long-term holders is trending to the upside. So rather than just looking at the circulating supply, we need to look at the percentage of long-term holders taking profit rather than the percentage of the circulating supply. Sounds a little bit confusing, but what I'll do, stumbling over my own voice, I'll scroll down and we can see once again the trend in profit taking from long-term holders when accounting for the percentage of Bitcoin held by long-term holders. Now what we can see here is that the percentage of Bitcoin from long-term holders that have actually transferred is actually much lower than what we've seen in the previous cycles. Now, one thing I can also do is, whereas the previous metrics are somewhat warped by the circulating supply, the amount of Bitcoin being transferred in previous cycles, here what I can do is look throughout the entire history of Bitcoin. And what I'll do is I'll just hide the Bitcoin price action once again so we can see a little bit clearer what the data is presenting to us. So if I just hide that, we can see that Bitcoin typically sees a larger percentage of long-term holder supply being transferred before a market cycle peak. Now, granted, we're not a million miles away from this. We can see in the double peak cycle, we had almost the exact same percentage as in the 2021 cycle. In 2017, we had slightly more than that. We can see at bear cycle bottoms, especially in the two prior cycles, this was again a very similar amount of long-term holders actually capitulating throughout the Bitcoin bear cycle. But this does give us a little bit of confidence that Bitcoin does have more room to go this cycle, not just purely based on the seasonality of Bitcoin, but based on the supply and demand economics of the network. Now, what I can do is if I just reapply the Bitcoin price action, we can actually see how much Bitcoin's price action typically increases from where we are today. So we're currently about 48.7% cumulative long-term holder Bitcoin supply being transferred throughout this cycle. If we look to the similar percentage in 2017, which we were at around that point on, let's just say, roughly the end of September, start of October, so a very similar time of the cycle to 2017, the Bitcoin price action was somewhere around, or the Bitcoin price, I should say, was somewhere around $5,000-ish. It's hard to find the exact figure on Google Sheets, but around $5,000, $4,000 or $5,000. Bitcoin did a 4x in Q4 following that. We can see in the 2017 cycle, as this was around 48%-ish, let's just say, the Bitcoin price during that period of time, which was April, around April 2021, was around $40-ish thousand. So we could see maybe closer to 50. Over the next few weeks, Bitcoin went up about 20-30% higher than that. In the 2013 double peak cycle, when the Bitcoin price had these two very clear, distinct peaks, when this metric showed a value of around 48%, let's say around the end of November, the Bitcoin price was around $500-$600-ish before we topped out at over $1,000, around a 40% increase. Now, I know this isn't an exact science, but not just looking at the seasonality, which everyone is focusing on. If we actually look at the supply and demand economics and the investor behavior and habits that we've seen throughout every Bitcoin cycle, looking at the long-term holder supply, the amount of Bitcoin that's being taken profit of, when taking into account the percentage of the circulating supply that is being held by long-term holders, which again, I know is a bit of a mouthful, but hopefully I've explained a little bit this video, we can see Bitcoin still has a fairly decent amount of upside to go this cycle. So just to summarize, the Bitcoin price is purely a result of the supply and demand economics of the network, and we can identify patterns in investor buying and selling behavior that give us an indication of where we are in the cycle. Now, we can see that we're probably much closer to the end of this Bitcoin bull market than we are the start. That's seemingly fairly obvious. But the Bitcoin price typically peaks, well, almost always has peaked, as we see a huge amount of these large long-term holders begin transferring to new market participants. And when we look at the cumulative percentage of Bitcoin actually transferring rather than just the raw number, we can see it's been incredibly accurate and very typical. They've always topped at very, very similar percentages through the bull cycles and also topped out at very, very similar percentages during bear cycles. So long-term holders seem to be more predictable than ever before. So not only do we have the market economics on our side and the seasonality, but every single on-chain data point is also looking like Bitcoin could have an explosive end to 2025. Keep in mind how many people were bearish on social media over the past few weeks and months. Keep in mind how many different indicators, metrics, crazy things people are pointing to try and justify the fact that Bitcoin has topped and we're entering a bear cycle. Don't overcomplicate things. Look at the data. Look at what Bitcoin typically does. Rely on numbers and facts rather than human emotion. I know it's very difficult to do and many people struggle to do it, but if you can just focus on some very simple metrics like these, it really clarifies the Bitcoin cyclical nature. And as always, let me know your thoughts below in the comments below and on social media. I look forward to reading and replying to them. Let me know if you think that this is a metric worth watching. If so, I'll definitely continue to do updates on custom metrics like these ones. And as always, thank you very much for watching, and I'll see you in the next one.